Welcome to Forex School Uganda. I'm Godfrey, your trading coach and mentor. We coach, we train, we have mentorship classes for those that would like to be mentored and equipped with the necessary skills to trade the Forex markets, or maybe the cryptos or the futures markets. Like we know, these currency markets are extremely ruthless, and if you have the passion to trade them but you do not have the skill, they will just murder you. They're extremely ruthless. You need to have the skill, and we are here to help you. That said, this video is strictly educational and not trading advice. If you're new to the channel, I promise you this is one place that you do not want to miss for your market analysis, to help you anticipate with precision what the next big moves in the market might be, what the next trends might be, whether the market is likely to be ranging, what direction it's likely to get to, how to detect early shifts within the market trends. Basically, it's your one-stop place for all your Forex learning needs. Make sure you subscribe to the channel so you don't have to miss any new educational content as and when it is posted. Don't forget to like, as well as that bell icon, so you are alerted in case we posted any new content. Now, what you're going to be looking at today is the NASDAQ. So let's take a look at the charts. So this is just for visuals. This is the monthly chart, just so you can follow closely and you do not mistake these charts as we change them as we go into the analysis. So currently what we see is price took an impulsive move to the upside. It was so strong that it blasted through this resistance area on the monthly. It just blasted through. This was a strong move. Again, like we've seen, it broke through this monthly resistance. Now, what happens when resistance is broken to the upside? It becomes support, right? So now, taking our tool to measure how much it has actually tried to recover this impulsive move to the upside, we do that using the Fibonacci tool. Now, what we see is that after price breaking through this resistance area here to the upside, it has tried to recover some bit of ground to the downside with this bearish move. If you look at this candle here and you compare it with this candle here, you can see, let's also include this other one here. You can see that this single bearish candle that is still running, since the month still has a few days to close. Now if you look at this bearish candle here, this one here, you can see that it has covered the same distance that this bullish candle and this, basically the last two bullish candles, the same area that was covered by the last two bullish candles has been covered by just a single monthly candle, while trying to retrace to recover the ground that was consumed during the impulsive move to the upside. So this retracement is a bit strong, very, very strong. We'll wait to see what happens. But like we said, this was the resistance that was broken and has now turned to support. Remember, we are still on the monthly chart, so you don't get confused. Now, what do we expect here? Market does not move in one direction. It moves in impulses and corrections, so retracements. So what we see here is that it moved impulsively to the upside and is now trying to correct some of this move. Now, when it moves so strongly to the upside, it leaves certain gaps. You may not see them on the monthly, but as you drop lower, you get to see the gaps that were left behind, and those gaps have to be filled. Now, once again, measuring this entire move, we see that price right now is ranging between this area here, 0 and a 38.2 Fibonacci retracement. It's not yet quite here at the Fibonacci level of 38.2 retracement. However, when you look closely, when you see this resistance area here that was broken, which is now support, it is matching with the 50% Fibonacci retracement level here. What we might get to see in the coming days or weeks and possibly months is market covering this ground to this area here before we can potentially see a move back to the upside. So currently, as it stands, it's in a retracement mode, trying to cover part of the gaps that were left behind during this impulsive move to the upside. Once again, what you shouldn't forget as we continue this analysis is that price has not yet reached at least the 38.2 retracement level as a retracement to cover part of this impulsive move to the upside, and so we still expect such bearish move potentially to this area here, which is a combination of both the 50% fib retracement as well as this resistance area here. Now dropping lower to the weekly, and I'll name it here so we can follow closely. So this is the weekly chart. What we see in this weekly chart is that price moved when it to the upside, blasting through this resistance area here, and when it got to this area here, it's been making a series of higher highs and higher lows. Higher highs, and the next time it came to create a low, it instead blasted through with this momentum candle to the downside, breaking through this support area here, this support area here, and it's now touching this support area to the downside. So now, once again, like we saw, as it was moving to the upside, it was creating a series of higher highs and higher lows, a higher high and a higher low, a higher high. Now it didn't create a new lower, a new higher low, but rather a new lower low. Now the fact that the series of higher highs and higher lows have turned into lower lows, potentially we could see now a lower high, and that signifies to us a shift in momentum and probably the trend changing. We do not know. Now what we see is this impulsive move to the downside from this area here to this level here, and our price is retracing and retesting this support, this resistance area here and this resistance area here. Now, as long as this market is still trending below this area here, it's a bearish market, it's a seller's market. As long as it's still trending below, as long as it's still trending below this resistance here, it's still a seller's market. So what we could see in the next coming days is price reacting within this area and probably dropping lower. Now what we'll be doing is preparing ourselves to see what setups the market might give us once it gets to this area here, as long as it does not break and close above this area here. So as long as it's still trending below this resistance area here, it's a seller's market, and we'll be looking for sell opportunities. Now dropping further to the daily, what we see is price moved impulsively from this area to this area, retraced a bit to retest this daily resistance area here. It held before price dropped further down to create a new low. Now what we have seen in these last few days is price trying to retrace and cover this move, but in the process created support here and resistance above here, and has currently broken above this resistance, this area here of resistance that price created, and now broke its own area that it created along its retracement as it moved to cover some of the gaps created left behind during this impulsive move to the downside. So now it has broken and closed above this resistance area here. However, what we see is that it is still now retesting and potentially rejecting this resistance here. You see this? The bearish move and the bullish move, and then another bearish move left in between these two bearish candles, left in between them a bullish indecision candle. Now that created resistance, which price is now currently retesting, and it's still holding. As you can see, the wick closed with this candle still closing below this resistance area here. So clearly resistance is still holding, and as long as price does not break and close both above this area and probably above this area here, it's still a seller's market. So now what do we do? If you look closely, you can see that price is rejecting this area, no, rather retesting this area, and as far as we are concerned, it's being rejected since it hasn't been able to break and close above it. So as long as it still remains below, it is a seller's market. What we could see in the next coming days is a move down to retest this support area here, and probably a breakthrough this area. And once it does that, what we might get to see is a retracement to this area before another drop to the downside. What pattern do you see with this move should it happen? That's what I see. This move and the drop, and then this impulsive move. If we get a drop to the downside and then a retracement to this area here, we might see a head and shoulders pattern created in the process. Now, taking a tool here to measure this move to the upside here, what we might get to see is once price rejects this area here and it is bounced off to the downside, we might see price retrace to retest this area here. And fortunate enough, it's actually a confluence of both the 38.2 fib retracement as well as this daily support area here. Now that would make it a strong area, and until price breaks and closes below, we can't call it a seller's market. So as it stands now, it is neither a bull's market or a bear's market. We could see price ranging between this area here, but our bias as it stands is bearish until price breaks above this area here and this as well and closes above. And what informs our bearish bias is what we saw on the weekly, this being the weekly chart, the fact that price broke below this support area here and is now currently just retesting it. And also if we could check the monthly as well, right here, this is the monthly time frame. Price moved impulsively to the upside, breaking through this resistance area here, so it's currently overextended to the upside. And like we said, when we use our tool, this Fibonacci tool here, to measure the amount of retracement it's currently at, we see it hasn't yet touched the 38.2 fib retracement. And once again, once we draw this resistance, the support area here, we see it's actually coinciding with a 50% fib retracement. So with a confluence of this support area here and the fib area, the 50% fib retracement area being in the same area, it could act as a magnet to pull price deeper into this area here before we could see a move to the upside. That's what is informing our bearishness in the market. Maybe we take a look at the COT data, which is the commitment of traders data. This data is basically released by the big players in the market that are compelled by the law to release data of the positions that they are holding on certain financial instruments, which is mainly in the futures market. But what you know, on the spot market, every instrument on the spot market is traded or rated against the dollar. So for currency, but we'll get into that as we get to analyze other instruments apart from this index. So now take a look at the NASDAQ data release. The previous week we saw a figure of 65,351 long positions. Now long basically means buy positions. Now the latest release is 62,829 positions that are currently held in the market. Now that's a difference of negative 2,522 positions, meaning that the long positions have reduced by 2,522. That means they have closed out 2,522 long positions, while at the same time, if we look at the short positions, the previous figure released was 59,192, and the current latest figure released is 58,089 short positions or sale positions that are held currently in the market. Now this difference, the reduction between the previous one and the current one as far as shorts are concerned, is a negative figure of 1,108, meaning that they have closed out 1,108 short positions. Clearly you can see the difference between this and this, that there are more buy positions that have been closed compared to the short positions. It's actually twice as much long positions that have been closed compared to the short positions. Again, but remember, it's a bullish market. Generally, it's a bullish market. What we are having is not necessarily a change of trend, but rather a retracement that we are targeting to take advantage of. See if we can get setups. Now, when you look at this figure here, the very last column, open interest, the previous figure was 263,134. The current open interest is at 263,107. A small difference. There's a small drop between the previous one and the current figure. Now that small drop tells you that the open interest as far as longs in the NASDAQ is concerned has dropped a little bit, just a little bit. It's a small fraction, which indicates to us that it's not necessarily a bear's market, but this could just be a retracement before we see further longs in the market. Now, so going back to our charts here, what do? What we'll do is for our swing positions, we will be dropping to the 4-hour time frame, and then we look to see what setups that suit our entry criteria that the market will give to us before we can take shots in the market. Then as far as the scalping is concerned and day trading, we'll be looking further down to the 1 hour, 30 minutes and the 15 minutes to look for our execution setups. However, remember for the day trading and scalping, you take advantage of small moves in the market. So these are wider analysis that we've looked at may not so much be very applicable. It's mainly ideal for those that are looking to swing trade. So once again, to recap it a little bit, as long as price is still trending below these support areas here, it's still a bearish market. We'll be looking to see the market could create shorting opportunities, probably come and give us what might be a head and shoulder in this area here before we can look to take advantage as the market drops to the downside. Take a look at the weekly. The price is testing this resistance area here, and until it closes above it, it's still a bear's market, still a seller's market. So we'll be looking to take opportunity in the lower time frames as price comes to this area here to see where it might go. And once again, once we take this Fibonacci retracement tool, we see that this same area here of weekly resistance that price is currently testing is actually a confluence of both the 61.8 golden ratio and the 50% retracement, as well as a weekly resistance area here. That makes it a very strong resistance area, and we could look to find setups within this same area for us to take advantage of, to see if we can have sales to the downside. Now, if you stayed this long, thank you very much. Do not forget to subscribe and also like the video. We'll be bringing you more educational content to aid your market perspective when it comes to the trade of different instruments in the market. We'll see you again. Bye for now.